Hello students, in present video I am going to explain about sixth problem from accounting for not-for-profit organizations. I am taking this question from Telangana State Telugu Academy Inter Second Year Accountancy Textbook. But this video is useful to all commerce students who want to know about this topic. So first 5 lectures videos links and the question are available in the description box. Let us see the problem first. From the following receipts and payments account, prepare income and expenditure account of a sports club Karimnagar. Receipts and payments account. On debit side, receipt side, 2 subscriptions 15,000 rupees, 2 donations 50,000 rupees, 2 legacies 10,000 rupees, 2 entrance fee 5,000 rupees, 2 life membership fee 3,000, 2 sports income 17,000, 2 Sundries 5,000, 2 sale of old newspapers 500 rupees. Payment side, buy land 30,000, buy buildings 40,000, buy furniture 10,000, buy sports material 11,500, buy sports expenditure 6,000, buy general expenses 2,000, buy magazines 2,000, buy balance carried down 4,000. 2 sides total 1,05,500. Additional information. First point, capitalize 50% of the donations, legacies, entrance fee and life membership fee. Second, subscription still outstanding amount to 5,000 rupees. Third, depreciate sports material and furniture by 10%. This is the question. Let us see the solution for this. In question, he has given receipts and payments account and some additional information. For receipts and payments account, date is not given, but we prepare receipts and payments account at the end of every year. Heading is income and expenditure account of Sports Club Karimnagar for the year ended dash. As date is not given, we cannot write the date there. Income and expenditure account is a nominal account. So nominal account rule we should follow while preparing this account. Nominal account rule is debit all expenses and losses, credit all incomes and gains. So as per that rule, expenses and losses of this firm we have to show on debit side, and incomes and gains of this firm we have to show on credit side. Let us see the receipts and payments account. In question, he has given receipts and payments account now. Receipt side, debit side, he gives capital receipts, revenue receipts both. Capital receipts means rare receipts. Revenue receipts means regular receipts. On credit side, he gives payments. Revenue payments, capital payments. Both are available in receipts and payments account. But we should take only revenue payments in income and expenditure account. Similarly, only revenue incomes in income and expenditure account. So revenue payments appear on debit side, revenue incomes appear on credit side. So let us see on debit side first. 2 subscriptions 15,000 rupees. Subscriptions means our members, to continue the membership regularly, they pay subscriptions to our firm. So in firm's books we are preparing these accounts. So to the firm, this is subscription income is regular income, means revenue receipt. It appears on credit side. By subscriptions, adjustment is given, therefore amount in inner column. Adjustment number 2, subscription still outstanding amount to 5,000 rupees, means subscription to be received for current year is 5,000 rupees. We are preparing this income and expenditure account to know the current year surplus or deficit. If you want to know the correct values, not only received incomes, to be received incomes also we should consider, because income and expenditure account is prepared under accrual basis. So in accrual basis method, we consider income received and income to be received. Similarly, expenditure paid plus outstanding expenditure to be paid. Therefore, subscriptions to be received, we have to consider, we have to add to this subscription amount plus subscriptions to be received 5,000 rupees. In outer column total 20,000. Next, donations 50,000 rupees. So donations means gift. If anybody gives a gift to us, that is known as donation. So they donated some amount to us. Donation is of two types: specific donation, general donation. If the purpose of giving that donation is clearly mentioned in the question, then we should treat that donation as a specific donation. For example, donation for building, donation for prizes, donation for mineral water, donation for purchasing a fixed asset. But that type of information is not available in this question. Means it is not specific donation. Specific donations are always capital receipts. Means under liability side of balance sheet we have to show them. Not here. But only donation word is given. So we should understand that this is general donation. Means without mentioning any specific purpose, donor donated that amount to us. So this amount we can use for any purpose. In case of general donation, accounting treatment is, if amount is small, we have to treat it as revenue income. Means you have to show here. If amount is huge, we should treat it as capital income. Means we need not to show in income and expenditure account. Under liability side of balance sheet it appears. Now the doubt is how to know whether one amount is small amount or huge amount. As a student you cannot decide this. It depends on the nature of the organization and size of the organization. Therefore, you can treat it as revenue or capital. Only the thing is you have to mention a note below the table. So donations are treated as capital income or donations are treated as revenue income. If he gives any specific instruction, then we should follow that instruction. In additional information, first point, capitalize 50% of the donations. Clearly he has given the instructions. So in donations, 50% is to be capitalized. Means in donation income, 50% income is to be treated as capital income. Capital incomes we should not credit here, so we have to ignore. If 50% is capital income, other 50% is revenue income, that revenue income amount appears on credit side. By donations, donation amount 50,000, in that 50% we have to treat it as capital income. So other 50% we are showing here. 5,000 into 5, 25,000 rupees. Next, legacies 10,000 rupees. Legacy is also one type of donation only, but we receive that amount through a will. So a person, when he is alive, he wrote a will, and as per that will, he donated some amount to our firm. After his death, legally some amount came to us. This amount is known as legacy. Legacy is always capital income because it is not a regular income. But if he gives any instruction, we should follow that. Here, instruction is given. Capitalize 50% of the legacy. So just like donation, in legacy also, only 50% is to be treated as capital income. So other 50% is revenue income. That revenue income we should show here. By legacy, towards legacy we received 10,000. In that 50% is to be capitalized. So other 50% we are showing here. 1,000 into 5, 5,000 rupees. Next, entrance fees 5,000 rupees. So a new person wants to admit in our organization. So at the time of admission, he has to pay some admission fees to us. This amount is known as entrance fees. So regarding entrance fees, there is one argument. Some accountants prefer to treat entrance fee as capital receipt, because one member pays this admission fees only for one time. This is a rare income, so it should be capitalized. But some accountants prefer to treat it as revenue income because membership is opened in these organizations for throughout the year. So regularly members join in our organization. As it is a regular income, it should be treated as revenue income. But if he gives any instruction, we should follow that. Here, related with the entrance fees also, same adjustment is given. Capitalize 50% of the entrance fees. If 50% is to be capitalized, then other 50% is to be treated as revenue income. That revenue income appears on credit side. By entrance fees, in 5,000, 50% we should treat it as capital income. Don't show that 50%. Another 50%, that is 500 into 5, 2,500 is revenue receipt. That amount we have to show here. Next, life membership fee. Subscription amount is what? To continue the membership, members have to pay subscriptions regularly. Sometimes not-for-profit organization gives one offer to members, that is lifetime membership. If member pays some lump sum amount, then he can become a permanent member in our organization. So that amount is known as life membership fee. So instead of paying regular subscriptions, if a member pays a lump sum amount towards subscriptions, then that amount is known as life membership fee. In the absence of any information, we should treat this receipt as capital receipt. Means in balance sheet under liability side we have to show this amount. Because a lump sum amount is going to come. Huge amount comes. It should be capitalized. So we should not show on credit side of this account. But if he gives any instruction, then we should follow. And here same adjustment is available for even a life membership fee also. 50% of life membership fee is to be capitalized. So if 50% is capitalized, then another 50% is revenue receipt. That revenue receipt appears here by life membership fee. 3,000, in that 50% we are taking here. 300 into 5, 1,500 rupees. Next, sports income 17,000 rupees. So there is a sports club, regularly they conduct a game. So through selling tickets, they earn some income. It is not for earning profit. So to run their organization, they need some income. So to meet day-to-day expenses, as they need some regular income, they are doing this activity, not to earn profit. So this is sports income is a regular income. Therefore, revenue income we have to show on credit side. By sports income, 17,000 rupees. Sundries, 5,000 rupees. Sundries means various small amounts. And under receipt side is giving sundries. We should understand that various receipts. So small amounts we receive. For each and every receipt, we cannot open a separate account. So what we do? By including all these small amounts, we open one account. That account is known as sundries or miscellaneous receipts. It is a regular income. Therefore, credit side we have to show that. By sundries, 5,000 rupees. Next, sale of old newspapers, 500 rupees. Newspapers regularly we sell. So it is a regular income, revenue income. Credit side we have to show. By sale of newspapers, 500 rupees. Receipt side completed. Now come to payment side. Payment side, he is giving capital payments, revenue payments both. But we should take only revenue payments on debit side of this account. And while taking these revenue payments, even additional information points also we should consider. First one, land 30,000 rupees. Payment side land is given. Meaning is this firm purchased land and they paid 30,000 rupees. As cash is going, as it is a payment, that 30,000 is appearing on credit side of receipts and payments account. Land is a fixed asset. So land firm doesn't purchase regularly. It is a rare purchase, rare payment. So it should be treated as capital payment. Means under asset side of balance sheet, we have to show this amount. Land 30,000 rupees, not in income and expenditure account. So ignore. Next, building 40,000. Same concept. They purchased building, they paid 40,000 rupees towards that. So purchase of building is also rare expenditure, capital expenditure. We should not show in this account. Next, furniture 10,000. Same. It is also a capital expenditure because furniture is fixed asset. Rarely they buy. So it should be shown under asset side of balance sheet, not here. Next, sports material 11,500 rupees. Sports material rarely they buy because this is sports club now. So bat, stumps, volleyball, net, etc. items rarely they buy. If they buy for once, at least for more than 1 year they use, till they damage they use. So it is a rare expenditure, means capital expenditure. We should not show that in income and expenditure account. But if there is any depreciation on this asset, that depreciation appears in this account. And in additional information, point number 3, he is giving depreciate sports material by 10%. So depreciation is loss. This is nominal account now. So losses and expenses we have to debit. Therefore, the depreciation we have to show here only. Depreciation on sports material. Sports material value 11,500. On that 10% depreciation we have to provide. It is 1150. So not only on sports material, in third point is giving that depreciate sports material and furniture by 10%. Even on furniture also we have to provide the depreciation. So for depreciation on furniture also we have to debit to this account now. Already we wrote depreciation on, therefore again you need not to write that word. Directly asset name you mention. Furniture. Furniture value 10,000. On that 10%, 1,000 rupees. Next, sports expenditure 6,000 rupees. Regularly they conduct sports. To conduct that game, they incur some expenses. This is regular expenditure, means revenue expenditure. We have to show here only. To sports expenditure 6,000 rupees. Next, general expenses 2,000. This is also revenue expenditure because generally we incur this type of expenses. Regularly we pay these expenses. So debit side to general expenses 2,000 rupees. Next, magazines 2,000. So magazines regularly we buy. Therefore it is a revenue payment, debit side. To magazines 2,000 rupees. Last one, balance carried down 4,000 rupees. On debit side, he is not giving balance brought down. Means opening cash balance is not there in this firm. But for current year, closing balance is available. Closing cash balance is 4,000 rupees. This is one asset. So in current year balance sheet, under asset side you have to show. This is income and expenditure account. Assets we need not to show here. Therefore, you have to ignore that. So not only this receipts and payments account, even from adjustments also, sometimes we have to take some amounts here. Let us see the adjustments and we observe whether we have taken all the points or not. First point, 50% of all these amounts we have capitalized. Second, subscriptions related adjustment we have considered. Third, sports material, furniture depreciations we have provided. So all adjustments and receipts and payments account related points we have considered. Finally, we should find out the surplus or deficit. Observe which side total is more. Credit total is more. So in rough notes, credit total you have to find. 76,500 minus debits total 12,000 rupees. Difference is 64,350. Credit side we wrote incomes. Debit side we wrote expenses. Income is more than expenditure. Therefore, this difference is known as surplus. So, excess of income over expenditure. If surplus comes, debit side we have to show that because debit total is less. If a deficit comes, credit total will be less. Then credit side you have to show that deficit amount. As surplus came on debit side, we will show that. To surplus 64,350. Then two sides put the totals. Total is highest value. Credit amount 76,500. Two sides we should write. So two sides total 76,500 rupees. So this is all about sixth problem from admission for not for profit organizations topic. Hope this video is helpful to you. Thank you.